You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Hello traders, this is your Options News Rundown for Thursday, October 11th. First up, Bloomberg is reporting that U.S. stocks are falling for the sixth day, extending the longest losing streak of Donald Trump's presidency. As an early rally in tech folded and energy shares plunged, the dollar fell with oil and treasuries rose. Earlier this morning, the S&P 500 index was down 1% and tumbled 5.5% in the past 6 days. The tech-heavy NASDAQ 100 reversed an earlier gain to trade lower following a 4.4% decline yesterday. Trading was heavy, with volume surging 55% above its average for this time over the past 30 days. Quote, "We are in a change in the markets because of the huge interest rate moves, so the market is trying to figure out what to do next," said J.J. Kinahan, chief market strategist at TD Ameritrade. "This is about a shifting of the sands and what's next." In addition to energy, biotech, insurance, and retailers weighed on the market, while car companies were one of the few bright spots. The VIX rose to its highest level since April. The stock market also roiled Asian and European equities. China's Shanghai Composite Gauge closed down more than 5%, and Taiwan's technology-heavy benchmark plummeted more than 6%. Europe's main equity index fell to its lowest since early 2017. The euro and the pound both advanced. Next up, CNBC's Jim Cramer tore into Federal Reserve Chairman Jerome Powell, but stopped short of his famous "they know nothing" rant from 11 years ago. Quote, "The fact is, I do have a better handle on the situation than the Fed does, just like in 2007, Cramer said on Mad Money yesterday. "Oh, I hate to show hubris on this show, or anywhere, or at home. But I'm sick of the Fed that reverts to a non-rigorous, non-homework-oriented approach every time things look good. It's like they unlearned all the lessons of the Great Recession." In 2007, Cramer sounded off on the then Fed Chairman Ben Bernanke and then central bankers for ignoring signs of the impending financial crisis. "They're nuts. They know nothing," Cramer blasted at the time. Recently, Cramer has been stepping up his criticism of the current Fed, blaming Powell and other policymakers for not looking more closely into the economic data before announcing its lockstep interest rate hike plans. Powell's remarks last week about monetary policy being a, quote, "long way from neutral" signaled the possibility of more aggressive path for rate hikes, sparking a spike in bond yields to 7-year highs and applying pressure on stocks. Finally, MarketWatch is reporting that OPEC and Russian crude oil production climbed in September, more than making up for an ongoing decline in Iranian output ahead of the enactment of the U.S. sanctions on the Islamic Republic's oil industry, said the oil cartel this morning. In its closely watched monthly oil report, the OPEC countries said its crude production rose by 132,000 barrels a day last month to average 32.76 million barrels a day. Output from Russia, the group's largest production ally, increased by 150,000 barrels a day to reach a new post-Soviet record of 11.54 million barrels, according to OPEC. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.